Hi everyone. Before I start this video, make sure that you are a part of my Discord server by joining the link in the description box below. Okay, so in this video, we'll be going over A-Level Accounting 2023 October-November Paper 2-3 question number 4. This is a Paper 2 which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. The total time limit given for this paper is 1 hour and 45 minutes. Since question number 4 is of 30 marks, ideally you should be spending about 35 minutes in order to solve this question. And in this video as well, we'll be attempting to solve this question under 35 minutes. So without any further delay, let's get started. Dave manufactures 2 products, A and B. He operates a system of marginal costing. For the first question, we need to explain one difference between marginal costing and absorption costing. So the most fundamental difference between marginal costing and absorption costing is that marginal costing values inventory at only the variable cost, whereas absorption costing values inventory at full cost, since we calculate the overhead absorption rate for our overheads within absorption costing. Let's write it down. Marginal costing values inventory at variable costs only, whereas absorption costing values inventory at full cost. Now for the second part, we need to explain one difference between a direct cost and an indirect cost. So again, the basic difference is that direct costs can be specifically allocated to our units of production, whereas indirect costs cannot economically be specifically attributed to the units of production. So direct costs are the costs that are incurred during the production process. They are directly involved in the production process, but an indirect cost is the cost incurred which cannot be traced back to the units of production. Let's write it down. Direct costs can be specifically allocated to units of production whereas indirect costs cannot economically be specifically attributed to units of production. And a basic way to implement this within our question is that any cost that can be figured out per unit will be our direct cost, and all the costs that cannot be figured out as per unit cost will be our indirect cost. Now we need to state the meaning of the following terms. The first one is break-even point. So break-even point is the point at which our total revenue will equal the total cost, so that it is a situation where there is neither any profit nor any loss. Let's write it down. Break-even point is the point at which total revenue equals total cost. So there is neither profit nor loss. Then we need to state the meaning of margin of safety. So margin of safety is basically the difference between our budgeted output or the actual output and our break-even point. So margin of safety is the difference between the actual or budgeted output and break-even point. Okay, now we need to state 3 situations where marginal costing can help in decision making. So the first situation would be a make or buy decision in cases where we can compare the cost of buying in the goods for resale to the cost of producing the goods on our own. And it only incorporates all of our variable costs. That is why marginal costs can help in that particular situation. So make or buy decisions. Similarly, it can also help making decision in case of a special order. So with a special order, we can figure out whether or not there will be some additional contribution. If there's a positive contribution, we can accept that special order. If there's a negative contribution, we would have to let go of that special order. So accepting a special order. And the third situation would be where we have limited resource. In case of limited resource, in order to allocate the resource to our different products, we need contribution per unit. And within marginal costing, we allocate cost as either variable or fixed, which helps in figuring out the contribution per unit. So the third situation would be in limiting resource situation. All right, that's all for the fourth question. Let's move towards the fifth part. We are now given additional information. Dev's business operates from one rented factory. The forecast data, which means that these are the budgeted data for the year ending 31st December 2024, is as follows. Okay, we're given the revenue for A as well as B. We have the direct materials, direct labor, supervisor fixed salaries. So these are our direct costs, which means that these will be variable costs. Supervisor fixed salaries is not going to be the direct cost. These are the indirect costs. Then we have variable overheads. So again, variable cost, and fixed factory overheads, so indirect cost or the fixed cost. And we have the profit or loss. The fixed factory overheads are allocated on the basis of units produced. All right. Now for the fifth part, we need to calculate the break-even point in units for A. Remember, the formula for our break-even point is total fixed costs divided by contribution per unit. We've already figured out that the supervisor salaries of 60,000 and fixed factory overheads of 33,000 will be the total fixed cost for A. So that will be 60,000 plus 33,000 as part of our numerator. Now for the denominator, we need the contribution per unit. And in this case, I think it would be easier to calculate the total contribution and then divide it by the number of units. So our total contribution will just be revenue minus the total of our direct cost or the variable cost, which in this case is 660,000. That's the revenue, minus 192,000, minus 156,000, and minus 114,000. And this results in the value of 198,000. Now we need the contribution per unit, which is just going to be total contribution of 198,000 divided by the number of units for A, which is 60,000. This results in the value of 3.30. That is our contribution per unit. And this gives the break-even points to be 28,181.8. And since we're talking about units, we always need to round it up. That will be 28,182 units. That's our break-even point. Now we need to repeat the same process for B. Again, we can follow the same formula. We've already categorized the fixed cost to be 35,000 and 44,000. So that's 35,000 plus 44,000. We can repeat the similar process for contribution per unit. Let's calculate the total contribution. We have the revenue of 680,000. Then we have the direct materials of 256,000. We have direct labor of 208,000. And we have our variable overheads of 152,000. This results in the total contribution to be 64,000. Now for contribution per unit, we just divide the total contribution of 64,000 by the number of units for B, which is 80,000. This results in 0.80. That's our contribution per unit. And this gives our break-even point in units for B to be 98,750. Okay, let's move towards the next part. Now we're given additional information. Dave is concerned about the forecast loss for B. He is considering two options. Option 1 is to replace the current model B with an upgraded model B. We need to increase the selling price of B by 10%. So the selling price, previously it's 8.5. Now we need to increase it by 10%. So 8.5 times 1 plus 10%, which gives the value of 9.35. That's our new selling price. We then need to increase the direct material price by 0.45 per unit using an upgraded material. So direct material per unit is also increasing. We first need the previous direct material. That is just going to be 256,000 divided by the number of units of 80,000, which results in 3.2. We now need to increase it by 0.45, which results in 3.65. That's the direct material per unit. Then we need to pay 18,000 for an advertising campaign to announce the upgraded model. So this will be added to our fixed cost. Okay, we have an increase in our fixed cost. Previously it was 35,000 plus 44,000. Now we have additional advertising campaign of 18,000, which gives our fixed cost to be 97,000. Then Dave believes that this will result in a 20% increase in units of B sold. Okay, let's increase our number of units. Previously, B had 80,000 units. Now we need to increase it by 20%. Times 1 plus 20%, which results in 96,000. Okay, and for this question, we need to calculate a revised total profit of the business if option 1 is adopted. Okay, since we already have the per unit selling price, per unit direct material, let us also calculate the per unit direct labor and the per unit variable overheads. So direct labor per unit will be 208,000 divided by 80,000, which results in 2.6, and the variable cost per unit will be 152,000 divided by 80,000, which results in 1.9. So now we can first calculate the contribution per unit. So the contribution per unit is just going to be our selling price minus all of the variable costs. The selling price in this case is 9.35. We have our first variable cost of direct material per unit, which is 3.65. We calculated it right here. Then we also calculated the direct labor as well as the variable cost of 2.6 and 1.9. Let's write it down. So minus 2.6 minus 1.9. This gives the contribution per unit to be 1.20. Now we can calculate the total contribution by multiplying the contribution per unit with the number of units, and the new number of units is 96,000. This gives the total contribution to be 115,200. Now we need to subtract the fixed cost from our total contribution in order to get the total profit. We also calculated the revised fixed cost to be 97,000, which gives the profit for product B to be 115,200 minus 97,000, which results in 18,200. And remember, we are asked to calculate the revised total profit of the business, which will include the profit of product A as well. And this will be the previous profit of 105,000. This will give the total profit to be 18,200 plus 105,000, which results in 123,200. Now for the next part, we need to repeat the same process with option 2. Let's have a look at our option 2. We are now discontinuing the production of B. Make the supervisor of B redundant, thereby incurring redundancy cost of 6,000. So this will be added to the fixed cost. Previously, our fixed cost was 35,000 plus 44,000. So 35,000 plus 44,000 then plus 6,000. Now we need to increase the advertising budget for A initially by 8,000. So this will also be a part of our fixed cost. And we are reducing the selling price of A by 0.44 per unit. So previous selling price of product A was 11. Now we need to reduce it by 0.44, which gives the value of 10.56. Now Dave believes that this will result in a 50% increase in units of A sold. So number of units will have to be increased by 50%. Previously the number of units was 60,000 for A. Now 60,000 times 1 plus 50%, since we are increasing it. This will give 90,000 units. Okay, for this question as well, we can start with calculating the contribution per unit. And since our selling price is being reduced, the contribution per unit should also be reduced by the same amount. So we can just utilize the previous contribution per unit for A, which we calculated to be 3.30. And we need to subtract it by 0.44, since this is the value by which our selling price is being decreased. So 3.30 minus 0.44, which gives the contribution per unit to be 2.86. Now we can calculate the total contribution. That will be the contribution per unit of 2.86 multiplied by the number of units, which we calculated to be 90,000. This gives the total contribution to be 257,400. Then we need to subtract our fixed cost. Okay, let's have a look above. Since we are discontinuing B, we are told that supervisor fixed salaries will no longer be included. So we do not need to include 35,000. So that will be 60,000 plus 33,000 plus 44,000, because previously we included the fixed cost for B, but now we are producing A. We are discontinuing B, which means that the supervisor fixed salaries will not be incurred, but we have to include the fixed factory overheads of 44,000. And this is because this is operated from a single rented factory. So the fixed factory overheads does not go anywhere for product B, even after discontinuing the product. Okay, so initially there will be 60,000 plus 33,000 plus 44,000. Then we have to add our redundancy cost and the advertising expenses. This will give the correct fixed cost to be 151,000. Let's write it down. And since we are now discontinuing with product B, this will be our total profit. That's 257,400 minus 151,000, which results in 106,400. We can now move towards the next part. We need to advise Dave which option he should choose. Okay, let's compare the profit. So profit for option 2 is 106,400. Clearly the profit for option 1 is higher. Let's write it down. So option 1 produces a higher overall profit, and this is a 5 mark, so we need to have 4 comments at least. Okay, the next thing, let's look at option A. So option 1. For option 1, we are upgrading our model. So we can question whether or not the existing customers for product B might favor this upgraded model. So will the existing customers for product B favor the upgraded model? Then let us repeat the same process for option 2. In option 2, we have redundancy costs because we are letting go of the supervisors. So will these redundancies affect staff morale or staff motivation? Let's write it down. Will the supervisor redundancy affect staff morale? redundancy affect staff morale. Then what else is there? We can also question the reliability of these estimations, because in option 1 we have estimated that there will be a 20% increment in units of B, and in option 2 we have estimated a 50% increment in product A. So will the estimate of 20% sales growth for B and 50% sales growth for A be reliable? Okay, now based on these factors, we need to make a decision. Personally, I would suggest to go with option 1, since it still provides product B, and that way we can still maintain the customer base or still cater to the needs of product B, and we can maintain a varied product portfolio for our business, which is always a good thing. Let's write it down. They should choose option 1 as it caters to the customers of product B and helps in maintaining a varied product portfolio. Alright, that is all for this question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.